Hello, in this finance video, I am going to cover the mortgage LTV. So LTV stands for loan to value, and it is basically a ratio, loan to value ratio. And if you haven't watched my video on mortgage deposits, I highly recommend you go and do that because this basically builds on top of that. So, a little recap. If you want to buy a £100,000 house, you need a loan. A loan for a property is called a mortgage. And let's say you don't have the full £100,000. Let's say if you have £10,000, that means you have, if you do 10,000 divided by 100,000, they equal 0.1 times by 100 to get a percentage. So you have 10% deposit. The LTV is basically just this flipped. So what it is, instead of 10,000, what it is, it's how much money you're borrowing. So if you are putting down, if you're putting down 10,000, total price is 100,000. It's total price. Let me 1 second. Loan amount. Yeah, do a different color. Equals total price minus put the man you're putting down or the deposit. So in this scenario, it is 100,000 minus 10,000, which would give us £90,000. So that's basically our loan. That's how much we're asking for the bank to give us. We're not asking for 100,000 because we're putting down 10,000 of our own money. To work out the LTV, you just get the loan amount, the amount to be borrowed, divided by the total amount, and that gives us the LTV. And if you times by 100, you get the LTV percentage. So in this case, it is 90,000 divided by 100,000, which equals 0.9 times by 100 equals 90%. So the LTV on this will be 90%. You might be noticing something, that this plus this equals 100%. And if you notice that, you are correct. If you have the deposit as a percentage, all you do is, to get the LTV percentage, it equals 100 minus the deposit as a percentage. Or if you have the LTV, you can just do deposit. To get the deposit, you do 100, or 100% I should say, minus the LTV percentage. So they are just the flip side of the same coin. So generally speaking, the greater the deposit, the better. And because as the deposit increases, the LTV percentage would decrease. So the lower the LTV, the better. Some people will talk about LTV, some people will talk about deposit, but essentially they're meaning the same thing. Currently, because of Corona and everything, you can, or not so long ago, you could only get what they were saying was deposits or mortgages with a deposit of at least 15%. Some people said you could only get LTVs of as high as 85%. It was exactly the same thing. If you had a 5% deposit, you would have a 95% LTV. If you have, let's say, a 45%, oh, this is LTV in this scenario, so I've done it the wrong way around. Don't want to cause any confusion here. Let's do this color. So if you have a deposit of 15%, you have an LTV of 85%. if you have a deposit of 5%, you have an LTV of 95%. Let's say you have a deposit of, let's say, 45%. That means you have an LTV of 55%. That means you are almost putting down the same amount that you are borrowing. Obviously, you would be paying more back than this because of interest. That's the bank's incentive to give you a mortgage because of the interest. That's basically their fees. So if you put down a high deposit or you have a lower LTV, loan to value ratio, the banks will lend you more money, more likely, for the simple reason you are de-risking it for them, because you are putting some money down and they are putting less money up. So generally speaking, the higher the deposit, aka the lower the LTV, the better mortgage packages you can get with lower interest, more favorable terms, and the more likely you're going to be able to get a mortgage as well. So that's it. If you have any questions, feel free to join the Discord group. We've got a bunch of finance channels. All the links for everything will be in the description. And as usual, I look forward to seeing you in the next video.